Few days back, I gave a presentation about this certification, a SEBI Investor Certification, which is has a free material, and even the examination can be taken at no cost at your home or at your whichever place you feel it is right. You can take up the exam online. So a pretty useful exam if you're an investor in the stock exchange. It doesn't just talk about the stock exchange alone, but it talks about insurance, different types of bank accounts. So anyone who is interested to know about different features in the financial market can take up this exam, whoever it is. He might be in a college student. Yeah, only thing is it asks for, of course, the mandatory is PAN. You need to have a PAN. So as long as you have a PAN and additional identification, just like your passport or your driving license or Aadhaar, then you'll be able to register for this and take the exams. One more interesting point I just thought I should keep you posted is that in the actual certification site, there are various mock exams as well. So there is a mock exam, but the subject of that exam, it is almost covers the uh, topics similar to the investor certification, but it calls itself as financial foundation examination mock exam. So ideally I would suggest, just to have how well you are prepared, I would suggest you to take that mock exam. So let's get into this one, and this is the certification homepage, certification.nismac.in. So you have to log in, and once you logged in, and I'll show the rest as well. So get to practice exam. Once I've logged in, get to practice exam and go to all these are practice exam, meaning it's all mock exams are available. Go to available exams, and there you have to search for financials finance foundation. Yeah, this one, mock test on MSM series financial education certification, 15 marks, 2 hours, whereas the actual exam is for an hour. So this one, I think it is for the earlier they had the topic was available as financial education, and then they changed the topic. Probably, I'm not sure, but I would highly. But if you took it, the topics in this exam, it is almost similar what you get in the investor certification. So I would highly recommend you to go through this exam, and it gives you, again, you can start the exam, no registrations required. So you can so here it is. I'm right now in the examination, start of the examination page. So here is the timer. So only difference is there it is just 1 hour, and here, I mean, it's something like a earlier version of the exam, but as I said, the questions are more and less similar. So I would always recommend to take this exams. So let's get started. So which are the following products do not fall under the category of insurance? So if you look at it, yes, accident insurance, yes, there is an insurance. Fixed deposit is just a deposit for which you might not get an insurance at all. Though government of India does provide a kind of an insurance if the bank fails, but that is not a considered as an insurance. You don't take insurance for your fixed deposit. So this should be the answer. If you look at it, theft insurance, fire insurance, it's all available. So fixed deposit is the one. We'll go to the next one. RBI can easily squeeze and expand the supply of money. This is a tricky question. There could be a lot of answers by increasing. First is eliminated by increasing, decreasing of inflation level. They cannot. RBI cannot do that. It's the market which determines based on the supply of money. The first one is ruled out by increasing the repo rates. This is possible. Increasing the repo rates is possible, or by increasing or decreasing the reserve requirement of the commercial bank. So this is also possible. Increasing the prime lending rates. All three is little confusing. So I would ideally. go with this either 3 or 4 is what I would go. So let me go with 3 because the reserve ratio is the bank which is having the cash which cannot be lent out. So that is the reserve ratio. So there are say for example there is bank has 1,000 rupees. If it's from it would say like 100 rupees you need to maintain a reserve ratio, and if it can reserve it can increase the reserve requirement to 120, then your disposable amount for business, that is for loans, will get reduced from 100 to 120. Naturally it is 1,000 minus 120 instead of 1,000 minus 100. So I would go with this. Next, the risk of company defaulting on payment is called as cannot be market risk, liquidity risk, should be a credit risk. The reason is the companies takes on credit and they have a payment terms after 30 days they can pay or 15 days depending upon the agreement they are supposed to have. So that way, I would say it's a credit risk. So after 30 days, the company doesn't pay. But for a retail person, if I go to any shop, they might always insist of cash and carry. In that case, there's no risk at all. But in case of a larger company, repeat customer, they will always offer it on credit so that they can get the payment later. So this is a credit risk. And then which of the following complaints are not handled by SEBI? This should be a straight answer. Non-receipt of dividend, takes care, no payment of bonus by, non-payment of bonus by insurance company, mutual fund deviating from the non-issue of contract notes by brokers on the client. So CB doesn't get involved in this. Insurance company, there is an IRDA, that is insurance regulatory. That is what takes care of all these issues. So this one is non-payment of bonus is related to the insurance company. So second is the should be the right answer. Then go to the next one. A holder of a no frill is not allowed to have this account. So it's just another savings bank account, no frill account. Is so third one should be the ideal one. Next, how many basic you might have the basic saving account? It is no frill. That is actually what could it mean is zero balance is just only one is there. Otherwise, if you can maintain the minimum balance, you can always have many accounts. So one that is second is what I have chosen. Next one is which of the following is a voluntary investment for individual guaranteed pension? Public provident fund is the voluntary one, not the employee provident fund or the general provident fund. Um, so there is employee provident fund, public provident fund. There is nothing like general provident fund. So ideally, it should be public provident fund. So cumulative bonus means for the insurance company the bonus of sum insured. I think bonus of the sum insured not making a claim. So bonus happens when you don't claim in the insurance. So the cumulative bonus is related to that. So I would ideally go for 3. So if you look at it, yes, gives you a kind of a flavor as what you can expect in the actual investor certification. So it's a good attempt to take this mock test. That is my point. What is the probability portability? Sorry, means in insurance parlance. It's not just insurance, even with the mobile phone also the portability is allowed. So basically if you link with that, so in that case it is switching of health insurance from one insurer to another at the time of renewal. So next one is a mutual fund invest on only on the shares of a company on one industry. So it's not indexed, not large cap, related to large cap across industry, diversified. It is again across could be small cap, mid cap, or large cap diversified fund. It should be a sector fund. Like for example, pharma sector, it could be a defense sector, it could be infrastructure sector. Now, if you look at it, that is a sector. The all three, the pharma, the defense sector, or energy sector, infrastructure sector. That is what, as far as India is concerned, that is expected to boom in the future. So the sectors funds could be the answer as well, and that is the fund probably one need to look at it. The others are like products like FMCG and all that is fast moving commercial good. It's almost saturated. So sector funds is the best one, and that is the answer as well here for in one industry. Albert Einstein is believed to have called compound interest. So interest, that is what is the accumulation of corpus. because compounding interest principle in which it works, because if you don't particularly accumulation of corpus towards retirement, if you don't take the money out, it gets interest, accumulation of interest happens. So that is considered as a eighth wonder of world by Albert Einstein. So we have finished 12 out of 50. Time remaining. Looks comfortable. Which of the following is not the purpose of insurance policy? This is slightly confusing for me. So ideally, I would say protecting stock market loss. No insurance company will provide you with that, protecting against it is because totally unpredictable due to various external factors. You cannot really predict that. So not a purpose of the any insurance policy is protecting against stock market losses. The principle of credit compensated compensation for unanticipated financial loss, that is straightforward insurance. The others one, credit, loan products, investment. So insurance should be the answer. This is slightly confusing for me. Anyone can insure anyone's life. So true only when there are insurable interest, uh, or it could be true only when there is a financial interest. Can also be right, because that is the previous one was related to. If you look at it, this one is compensated for unanticipated financial loss because it's going to give a compensation. So that way, I would go true only when they have a financial interest. So I'm worried about the financial loss. So that way, anyone can insure anyone life. This statement is true only when there is a financial interest. And go with that. Mm, Which form provides summary of all taxes from a particular PAN number? So Form 26AS. Another question is, when did this Form 26AS has come in? So it's around 2014 or 15. Prior to that, there's no Form 26AS, and now we have another form called AIS itself, the annual investment summary or something like that. AIS has also come in. This is from 2020 or 21 onwards. I mean 2014 onwards they introduced from 26 years. ITR is a return. Form 16 is provided by employees. So summary of all deducted in a PAN number is Form 26 years. Collect money from individual, invest in company listed in the. So I'll go with this one, asset management company. So it's basically for mutual funds, related to mutual funds. Who is does that? It's the asset management companies. Um, okay, next one. Defined benefit plan is one in which this is also a tricky. A fixed amount invested in the market linked benefit plan is not specified. Monthly pension available. Investment return or fixed. Retirement benefits depend on the amount accumulated. Uh, so retirement, I will go for this. Retirement benefits is dependent on the amount accumulated. So benefit plan, yes, how much is the amount accumulated? You can go with that, or it could be the investment return are fixed as well. I specified proper monthly pension payment is available on. This can it's a little tricky question as well. Monthly pension payment available on retirement. So I'll go for with the second one, available on retirement. That is the benefit plan, and in which of the insured money is paid to the policyholder on a later than the maturity date. On the maturity date, could be endowment policy on the mature date. So this is later than the mature because it says later. I'll go with this deferred annuity plan. Check which is not crossed. Yeah, it's pretty straightforward. Bearer check. Uh, Next, the guarantor is associated with a term. Yes, actually, for the loans, for mutual fund, insurance policy, pension account, you have to have a nomination. Nomination have now almost become a mandatory for any of the investment, so that if you're not available, I mean, not available in the sense in case of death of a person, his legal heir is able to take it. So nomination, in case of nomination, it is for the insurance policy, mutual funds, pension account. For guarantor, it for loans, it has to be guarantor. So under which section income can claim rebate on interest on? It is on 80 uh, ATCC, ATD. I think it's for the medical insurance. So it is ATE, education loan. Under which plan does mutual fund investor gets dividend when declared? This dividend payout plan. That is also a straightforward. Which is whole value. So whole value, then it is fully convertible debentures. If it is a partial, then partially converted debentures. I'm not going into the details of what is a debenture. That you can always get it from the internet or from the material. Cash flow statement is a record of your income and expenses. That's also a pretty straightforward one. So Anupama, this is an interesting question. I found 3 or 4 questions similar to a situation given. Found that in the actual exams also. This is a kind of a situation question. Has created portfolio of 10 lakhs in which she has invested in 5 on tax-free bonds, 1.5 on PPF, and 3.5 on pension plan. What is the risk associated? What do you think so? Liquidity risk, debt risk, currency risk, credit risk. Which one should be? Liquidity risk possible. Yes, because there is always a kind of a period, because if you look at tax-free bond, it could be 5 to 10 years. Public in PPF, you need to hold it for 15 years. And similarly, pension plan is something like on your retirement. So if you have invested on that, you could get, in some cases, you could get a loan or withdrawal after a certain period of time. So it gives a liquidity risk. So you cannot liquidate the entire amount as you wish. Whereas in FD and all, you can always do that. So liquidity risk. And most of the insurance refuse to medical cover diabetic. So this should be high impact and high frequency, because he is diabetic. Even the premium will be at a higher amount. So this is because it is high impact and high frequency. So for the debt fund, shorter term capital gains is applicable if this holding period is less than 1 year. Less than 1 year. As of now, it's about 15%. TDS is detected, and for long term capital gains, it's around 10%, subject to a condition in 1 year. You have got what is that to say? So again, this is pretty little confusing as well. We need to check for debt mutual funds, because equity mutual funds I'm sure, but debt mutual fund, it should be less than 1 year. So what is a short term? If it is more than 1 year, then it becomes a long term capital gains, where it is 10%, subject to the total capital gain is 1 lakh, then it is 10%. Which of the following is true documentation or the so do not sign any contract without understanding, because you need to actually understand, but people generally don't do that. Just like in online also, whenever you have some 15-20 pages, we just say agree for that, but generally you are not supposed to do. You're supposed to read it and get it clarified. Do not sign any contract without understanding. Next one, which of the following is a credit rating? Corporate debt, it's by SEBI, not RBI, SEBI or ICRA. So it is should be SEBI provides the rating. It's for individual. Yes, I'm sure it is SEBI. For a corporate also, yes, it could be SEBI or SEBI. I'm not sure. So let me go with SEBI. So if you find out another answer, yes, you can always comment it whether which one is right. But I still go with SEBI. Which of the following would appear in the cash flow statement? Its monthly electricity bill. That is because it's a kind of an expense. Home loan. Yeah, it's for individual. So cash flow is particularly for corporate. So it should be monthly electricity bill. Cell phone, car. Car again, it could be not in the cash flow. Maybe your EMIs could be there. Car EMI, particularly if it's company owned, then it could be. But in this case, monthly electricity bill is there in the cash flows. Which of the following fund least credit risk? I would say government security fund. Phishing is risk is associated with loan product, insurance, investment product. I'd say phishing risk is related to something like either investment or payment. You make the payment, they try to get the details to log into the account and then take it out. So I'll go with payment products. Retirement planning is a continuous process, it's not one time. Um, by choosing one of the alternative facing, so this is an opportunity fund. So if you are invested in one particular avenue or field, that money is locked. If at a later point of time you come to know that another field there could be a better return, because your money is already locked, you are losing the opportunity. So it's an opportunity cost. Concept is called opportunity cost. Loans against security. This is loan. This is straightforward. Following this is also straightforward. Which of the following can be used to withdraw? That is withdrawal slip. This rush of investors in the stock market when it is bullish, herd mentality, and it could be bear market when they sell it. That also happened. Herd mentality. We found it on the election date when it just fell down. Sensex fell down because everybody was trying to sell because there's so many ambiguity of the stability in the country. Because it's a kind of a herd mentality because they are trying to sell off the share, and the Sensex dropped. So herd mentality is the answer. A bank uses bank deposit by account holders to lend to various purpose. Which among the following is a fraudulent scheme? Then Ponzi scheme. This is pretty straightforward. Offers credit rating of company debentures. I'll go with credit rating agencies. This could be maybe you could cross check whether does SEBI does that. This you can check as well whether it is SEBI or credit rating agency, and you can choose that as well. Each of the risk is a lot in the floating rate is the interest rate risk. Floating rate because depending upon the if you are choosing a floating rate, the interest can get changed by the bank. Fixed interest rate, fixed home loan, they will not change the interest rate. So this should be interest rate risk. Immediate in an immediate annuity, the annuity pays start immediately at the policy maturity or the vesting date, on the date on which it is supposed to start. Vesting date should be the right date on which it should start. Which among the following can be brought through the, so this is again straightforward, units of exchange traded funds. Which one? Blue chip. Blue chip is related to large cap, so that's a large cap fund. Which of the following is the most liquid? Bank saving. This is also straightforward. Not much to discuss. This is straightforward. Risk capacity does not depend. It does not depend on um, city of residence. It does not depend. So anywhere depends upon an individual. Yes, on earlier age, if you're young, risk taking capacity is higher. So it depends on that. Income tax, yes. If you're on a high income, yes, you will not bother about your risk. You have money at your disposal. You'll try to make most out of it. You'll try to increase the returns. So in that case, income tax bracket also plays an important role. Net worth is something related to your disposable amount. So that also have a dependency. So city of residency, I'll choose. Which document? So this is profit and loss or balance sheet. That is where you have the assets and liabilities. So which is the policy? This is monetary and fiscal policy. A stockbroker is a member of stock exchange. I've done with that. If you want, you can go back to the exam. I'm not going to do that. I'm just going to end the exam and see how I got about five questions. Somewhere I had a dilemma, so maybe you got to check on that. Otherwise, yeah, it's a good practice, so that like, and I am sure, yes, if you are getting about anything about 35 or something, you are, because as I said, syllabus more or less, I'm not sure what is that, the financial education, I think they are discontinued. But what I found out was it's almost, the syllabus was covering almost what is there in the your investment certification exam. So I would ideally recommend that you take this mock exam and see how you are performing, and then take the real online exams as well. I hope you found this useful. Do subscribe to my channel. Thanks and cheers.